What if I told you that everything you've been taught about retirement savings, the idea of hitting a magic number, could actually be putting your future at risk? I've seen retirees with $3 million portfolios lying awake at night, terrified that they'll run out of money, and others with half that amount living completely free, traveling, giving, enjoying life, without any fear whatsoever. So what's the difference? It's not the size of their portfolio, it's the structure of their income in retirement. In this video today, I'm going to show you why obsessing over your savings total is a trap, why traditional accumulation strategies create false confidence, and I'm going to show you the income matching method that transforms stress into true security in your retirement, regardless of how much you've saved. So let's get right into it. For decades, the financial industry has pushed one idea, that your retirement security depends on hitting a big number. $1 million as an example, $2 million. Some advisors even throw out the $3 million number or more. So people spend 30 or even 40 years chasing this mythical number. They measure success by the size of their portfolio, and they think, once I hit that target, I'll be safe and free and confident. But here's what they don't tell you. That number doesn't protect you. It doesn't guarantee your income. It doesn't shield you from inflation, market volatility, or bad retirement timing. Retirement calculators don't ask you about your income needs. They don't ask you how your money will flow in month to month. They just give you a target based upon averages. And that creates a dangerous treadmill. People keep working longer, saving harder, and even when they've reached that number, they're still anxious. Why? Because they built up a pile of money, but no clear plan on how to turn that into income. That's the retirement myth that I'm talking about. It offers the illusion of safety, but creates constant uncertainty. Understanding this accumulation mindset is critical, but now I want to look at what actually works. I want to show you the success patterns that we've seen in real retirement clients that we work with. Over the years, I've seen something powerful. People with smaller portfolios who retire with total confidence, and people with huge portfolios who are afraid to spend. What's the difference? It all has to do with your income structure. When retirees have reliable income that covers their needs, they relax, they enjoy life, and they don't have to watch the markets daily. But when all their income is tied to a volatile portfolio inside of the market, they hesitate. Even with millions in the bank, they always ask, can I afford this? Retirement satisfaction isn't tied to your net worth. It's tied to how your money flows in. The best retirees don't obsess over their retirement account balances. They focus on whether their income supports the life that they actually want to live. And here's the real kicker. Many high satisfaction retirees don't even know their exact portfolio value because they don't need to. Their income is steady and predictable. These patterns tell us what really drives peace in retirement. So let's talk about how you can create that with the income matching strategy. Here's where everything changes with the income matching strategy. If you've read my Red Zone Retirement Planning Guide, you already know this. It starts by separating your spending into needs and wants. Needs are essentials like housing, food, healthcare, basic living expenses. Wants are your lifestyle choices. Think travel, hobbies, gifts, and goals that you have. When we build a retirement plan, we make sure that your needs are covered first by guaranteed income sources like Social Security, pensions, or annuities. That creates a firm foundation for you. You know that no matter what happens in the market, your basic life is funded. We then build the second layer, which is your wants. These are funded from more flexible, growth-oriented income sources that can handle some fluctuation here and there. This strategy shifts the focus from how much money do I have to how does my income meet my lifestyle goals and needs and wants that I have. It turns retirement from guesswork into clarity. Now that you understand the shocking truth about retirement planning, I want you to fill out the questionnaire in the description of the video below, and I'll personally send you a video analyzing your specific situation, and I'll show you how to optimize your retirement plan as a whole. Let's talk about that guaranteed foundation. The first step is maximizing your Social Security benefit. It's not just about when you file, it's about claiming smartly in a way that boosts the lifetime benefit for you and your surviving spouse. If you have access to a pension, how you elect those benefits can be the difference between peace of mind and risk in retirement. And if there's a gap, that's where annuities come in. Properly used, they're not about growth, they're about guaranteed income. Annuities can create dependable, contractually guaranteed income for your entire life. Here's why this matters. When your needs are covered by guaranteed income, you're insulated. Market dips, they don't threaten your grocery bill. Inflation, it doesn't keep you up at night. This layer of security provides financial protection, and also it provides you emotional security in retirement to safely spend your dollars month after month after month. So your essentials, they're safe. But what about your lifestyle, travel, and legacy goals that you have? That's exactly where the next layer comes in. Your wants matter too. Retirement isn't just about survival, it's about freedom. In your wants, this is where we fund your travel, your hobbies, giving, and family experiences that you want to have. We call it the growth income layer. This layer is built from investments designed to generate sustainable income while still growing over time. Here we use dynamic withdrawal strategies to adjust income based upon market and your life needs. We use bucketed accounts that you have for short, medium, and long-term spending goals that you have. Income-focused investing is going to generate current cash flow for you, and this is very key. By separating the needs that you have from the wants, you gain emotional control. You don't panic when the market drops because your needs are met, and you don't overspend during the good years because your income is structured strategically based upon the lifestyle cycle that you're in. This layer supports both your emotional enjoyment and your legacy goals later in your life. So now that you've seen how this income matching approach transforms retirement security, let's look at how you can implement this advice into your retirement plan. So how do you take all of this in? The income matching concept, the layered planning, the needs and the wants framework, and how do you actually build a retirement plan that works? You follow a simple but very powerful blueprint. Step 1, categorize your expenses. Start with your current spending, break it into needs and wants. Be honest here. You have to know how you're spending your money and what do you want to spend it on. The next thing, step 2, inventory your income sources. Social Security, pensions, rental income, dividends. List everything that you have that's guaranteed. These are your needs that we're going to use to fund from these sources. And what are your variable income sources? Then what you do in step 3 is match your guaranteed income to your needs. And if there's a gap, you fill it strategically with annuities or delay your Social Security filing. Step number 4, build your growth income layer to fund the wants that you have. This includes market-based investments, structured withdrawals, income-producing assets that you have. But here's the key. The best plans aren't rigid. They're flexible because real life changes happen every single day. Markets shift. A downturn or a bull run can impact how much income you draw from your growth assets. Lifestyle shifts as well. Maybe you travel more at first during the go-go years, then you slow down in your no-go years, or unexpected medical bills pop up. Taxes change, legislation changes, tax brackets move, and your plan must adapt. A smart retirement plan is reviewed at a minimum annually, not once a decade. It's flexible by design, so you're not caught off guard when one of these things happen. And don't forget to bulletproof your plan. You must protect your plan from the 2 biggest threats that retirees face. Inflation is the first one. It quietly erodes your buying power over time. You need income sources that adjust, like cost of living indexes on your Social Security, real asset exposure, and investments that outpace inflation over the long term. And don't forget about the second thing, which is long-term care risk. One single medical event can drain your retirement accounts fast. You need a plan that addresses cost of care, either through insurance, asset buckets, or family support strategies. The income matching approach makes this all possible because once your needs are secured and your wants are strategically funded, you can build in these protections without sacrificing your current lifestyle. This is what real retirement planning looks like, not just saving a number, but designing income with intention, flexibility, and resilience. So now you know the truth. It's not about how much you've saved. It's how you turn that savings into reliable income that determines whether you thrive or you live a retirement based in fear. You can build a plan that covers your needs with confidence, funds your lifestyle with freedom, and protects you from the risk that most retirees ignore. If you're ready to stop guessing and start planning with clarity, fill out the questionnaire in the description below, and I'll personally send you a video breaking down your exact situation, showing you exactly how to build a retirement income plan that gives you confidence no matter what the market does. Don't leave your future to chance. Take control today, and I'll see you on the next video.